Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A new high open and high close yesterday. One not seen since April of 2022. And only capped by the rising middle time, currently at 109.47. Highlighted in bright red on my daily chart, and that's of the late November 2022 to early January this year bullish Andrews pitchfork. However, the pattern the action created yesterday was an indecisive spinning top, and one that is right at the top of the recent market. Additionally, you also have above the interesting but untested 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Now, going back to the bullish Andrews pitchfork, this has been showing the bullish angle of attack here since the start of the year. Meanwhile, support below is again unsurprisingly the May 2020 low at 107.66 and the April 2020 low at 107.25. Now, so far today, initially a little higher, this has given way and we are currently looking at possible bearish engulfing pattern, which to be honest isn't that big an ask given that yesterday was an indecisive spinning top. Cable, aka sterling against the US dollar. A second indecisive pattern yesterday, this time an indecisive spinning top, a large one to complement last Friday's indecisive doji cross. However, yesterday's action could also be seen as a combined key reversal down and bearish engulfing pattern. This is the first pause the market has had since breaking above the September 2020 to January this year ascending wedge pattern earlier this month. I've highlighted this pattern in dark blue on my daily chart. The base of yesterday's action was on the support seen from the breach to lower trend line of the ascending wedge pattern, currently at 123.25, as well as the important 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. We have further support at the June 2020 low at 122.48 and the Fibonacci and other closing base congestion in the 121.50 zone. Overhead, we have resistance at the December 2022 high at 124.45, though prices yesterday pushed this envelope a little higher by a couple of ticks. Additionally, there is resistance above from the May to June 2022 based congestion, starting in the 124.65 area and up to the September 2020 low at 126.72. Just above this, we have the rising middle time, currently 127.05. Of the early November 2022 to the early January 2023 as yet untested bullish Andrews pitchfork, which I've highlighted in bright red. This is quite a young pattern, but it still manages to show the bullish angle of attack of this market. Overall, the late September to late November 2022 ascending wedge pattern is still the most relevant pattern here and continues to influence the market. Prices had previously managed to reach the primary target for this pattern in the 124.20 area, though we still have opened the secondary harder to reach target X3 in the 128 even area. Now so far today, a continuation low below the 50% Fibonacci line and the lower trend line of the ascending wedge pattern, but not by much right now. The real core strong support is the untested lower time, currently at 121.67, and we don't seem comfortable to try that far lower just yet. Euro sterling. A second bullish white soldier yesterday and a continuation onwards from the previous session's bullish engulfing pattern. These last two sessions have been a somewhat counter-reactionary move higher after the earlier attempts lower had failed, especially in trying to penetrate the combined supports of the April 2021 high at 87.19 and perhaps more importantly, the swirling entwined mass of the medium moving average, currently 87.30, and the short medium moving average, currently 87.29. These two moving averages had made what I called a mutated golden cross towards the start of January, and because the moving averages entered in the wrong way, followed by a genuine golden cross, and that was only 2 weeks ago. Further down, the next support is the April 2020 low at 86.69. And to be honest, I'm not sure how strong that is, as it's been eroded during most of the second half of this year. Meanwhile, overhead, Well, we don't have that much until the 50% Fibonacci line of the March 2022 move at 88.51. You may remember this was the cap on the roof pattern seen back in November last year. Now, what has fortified the earlier interesting move lower early last week was how the previous week had been a weekly key reversal up, and thus early last week's actions lower were given very much a countering action. The halt of that move lower by a combination of moving averages and the April 2021 high is therefore very, very significant. Now, so far today, a move higher up towards the overhead 50% Fibonacci line at 88.51, but cautiously. US dollar against the Indian rupee. A key reversal up and bullish engulfing pattern yesterday. This was a reactionary move higher after the recent bearishness. I suspect the reason we saw that happen was due to last Friday's first dip and close below the recent 50% Fibonacci line at 81.13. On Friday, the move lower was not strong enough to tackle the next support, and that's the early August today uptrend currently at 80.96, with the market stopping just short of it and closing just over it. I highlighted support in bright red to not only show it more clearly, but also to acknowledge its role as the lower trend line in the August to September ascending triangle pattern. And that was so influential during autumn and winter last year. Now, looking below this support, well, we don't have that much until we see a combination zone of November 2022 a low at 80.46 and a middle time currently at 80.24 of the October 2022 to January 2023 bearish Andrews pitchfork, which I conveniently highlighted in dark blue. The Fibonacci congestion also at 2021, the rising long moving average currently at 80.16, and the September gap 80.16 to 80.18. Quite a combination there, but there is something further which I will detail shortly. Meanwhile, topside, we still have available the pretty obvious cap of the rising medium moving average, currently at 81.17, especially on a closing basis. Plus, influence from the declining short medium moving average, currently 81.96, that is just a little higher up. Now, the big pattern here, and I suspect the reason why the supports below have become very influential, is not the bearish Andrews pitchfork, though it's big enough on its own, a pattern on its own. Rather is the action since September 2022 to date, forming a large double top, Adam and Eve type pattern. We are currently on the final leg moving lower, and this pattern will very much depend on whether the market will drop down to the neckline of this action, which I'm currently indicating to being in around about the 80-20 zone. Once there, it will then depend on what the market will do if it gets there. Now, so far today, well, there's a further move lower towards the medium moving average and the short medium moving average. Currently 81.96. So it's actually moved higher, further move higher rather than lower towards the medium moving average and the short medium moving average, currently 81.96. And the upper time at 82.34, all of which lie ahead and higher. US dollar against the Brazilian real. An indecisive doji cross yesterday with a long tail after the previous session's somewhat reactionary bullish engulfing pattern. The day's action saw a dip back below the lesser Fibonacci line at 520.31, and more importantly, the rising long moving average, currently 518.55. But it was not able to hold on to this decline, and prices rallied to finish where we closed on Friday. Overhead, we still have the 50% Fibonacci line of the March 2021 to May 2022 move at 522.76, plus the flatlining medium moving average, currently at 525.15. And the short medium moving average, currently 526.88, before we reach the combination of the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37 and the declining upper time, currently 528.05. Of the well-bashed and broken July to September 2022 shallowly bearish shift pitchfork. Now, this pitchfork is highlighted in dark blue on my daily chart, and it had seemingly repaired itself despite the earlier onslaughts. Over all of this, perhaps the most interesting recent action had already happened by the 12th of January. And that was setting up here for a monthly key reversal for January. And that's happened already. If we close on the 31st of January, either under 518.5, let's say 518.51, and or over 528.60, then we'd be on anything in between and would have the lesser outside month pattern. Right now we're sitting in outside month territory. US dollar against the Mexican peso. A bearish opening Black Maribosa yesterday, and a second bearish Black Crow, as well as a reasonable follow-on lower to the previous session's reactionary bearish engulfing pattern. Prices punched down and closed below the support at 1885.40, but were halted and ended up closing right on the well-broken upper time, currently 1879.73 of the big old March to July 2022 bearish Andrews pitchfork. Now, I would so like to retire this pitchfork, but as long as it does things like this, providing dynamic support or resistance, I will keep it despite cluttering up my daily chart. Overhead, we still have the middle time, currently at 1901.77 of the late September to mid-December 2022 bearish shift pitchfork, which I've conveniently highlighted in bright red on my daily chart. Whilst below we have the old neckline of the January to May 2021 head and shoulders top, currently at 1868.79. As well as the lower time, currently 1863.92 of the large March to July 2022 bearish shift pitchfork, which is highlighted in dark blue on my daily chart. So far today, well, a reactionary move higher, utilizing that broken upper tine as a base and peaking up over the resistance that seems just over that resistance, but it seems to have been turned back into a little bit of support at 1885.40, but nothing else other than that.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.